Hi everyone, thank you for joining. We've got a good amount of people now, so I think it may actually be operative for us to get started straight away and maximise the use of our time. So we've got an hour, and welcome to our webinar, in which we will be exploring the changes happening surrounding the IR35 legislation. I'm Matt, Principal Consultant at Consultancy Plus. I lead our HR consulting practice. Today we'll be equipping you to understand the legislation and its changes, understanding the CEST tool, which is the check employment status for tax tool, exploring your possible options. Now there's a lot of depth of information in this section in particular, and then we'll be wrapping up with a 15-minute Q&A. So please, if you have any questions crop up throughout the webinar, do make a note of them and we can provide you with some clarity. Apologies for this, but our chat function's not actually working today. So instead, please send any questions you have to the inbox consultancy.plus@reed.com, and you'll see that on your screen now, and we'll get them lifted straight onto this session and they'll feed directly into the Q&A at the end. So this webinar will be delivered jointly by Consultancy Plus and Reed Talent Solutions. So thank you to everyone in Reed Talent Solutions for inviting us to host this session. I'm sure you all know Reed, but you might not have come across Consultancy Plus before. We are the consulting and project delivery arm of Reed, and surrounding IR35 in particular, we've supported clients manage these changes in the public sector from 2017 and in the private sector since the announcement in the 2018 budget. This webinar signals the beginning of our IR35 series, including the launch of a website dedicated to providing you with the information you need to start to manage these legislation changes. The dedicated site will feature plenty of really informative content designed specifically for this purpose, including a selection of 90-second videos that deep dive into the key areas we'll be discussing. Today's webinar lays the foundation of an extremely complex subject area. So to build on the information from today, please do go and check out the website, and we do hope that you enjoy and find the content useful. We'll make sure this link is made available to everyone in due course. So without further ado, on to the speakers. We have a panel of brilliant minds with us this morning, delivering a wealth of excellent content on the webinar today. I have with me Richard Smith, partner at Consultancy Plus and Director of Business Transformation, Steve Dilley, Managing Consultant for HR Transformation and Change, and James Bridgeland, Consulting Director. So here's an overview of how the session will work and what to expect. It will be very, very interactive. I've prepped each of the panel with a couple of questions to chat through, so they're going to share some informative content with you. I'll then ask them some follow-up questions. Like I said, feel free to add any of your own into the chat box, although in this case it's not going to be the chat box, it will be the email box, which is monitored by Olivia, and she will send them over to me. We might as well give the panel a hard time while we're all here. And we'll also look at sharing some of the data insights from the questions that we asked during the sign-up process as well, so that should be particularly interesting. So on to part one, which is understanding the legislation. So kicking off, I think it's worth giving everyone a brief overview of what's changing. Richard, I'm going to come to you on this. However, before I do, I wanted to share the outcomes of a LinkedIn pulse survey that we did last week. We asked the question, do you think that your organisation understands IR35? And the results are in. We found that 58% of companies reported that they did not understand the legislation well at all. So if you might fall into this category, don't worry, you're not going to be the only one. As this is just the start, understanding the legislation is key. But as an organisation, it's what you do with this understanding when implementing a strategy that will see the difference between compliance and non-compliance. So, Richard, I think it's a good time to bring you in to shed some light on things. How can we go about understanding these changes?
Thanks, Matt. So I've got some slides to take you through. So if we get those up on the screen, that would be great. So IR35 is tax legislation. It's designed to try and identify whether somebody is actually a disguised employee. What that means is that they should be paying the same kind of tax as somebody else that's doing roughly the same job, so effectively the same level of PAYE. It's primarily aimed at PSCs, but it does cover other companies like partnerships, and it excludes sole traders. It's not new legislation, it's been around since the year 2000, and really what's changing, and this has already happened in the public sector in 2017, is that the decision from deciding whether somebody's inside IR35 is moving from the contractor to the client. And once they've done that, the client then needs to pass the status determination onto both the contractor and to the client. So that formally has to be passed across, and then the agency will then pass it through their supply chain as well. And the contractor will have the right to appeal the decision. So it's important that if you're employing limited company contractors, that you have a process to enable them to appeal any decisions. And if the contractor is determined to be inside IR35, the key change is that you can no longer pay the contractor gross. So you'll need to deduct tax and national insurance before you pay the contractor. And if you're a levy payer, that has to be paid across to HMRC as well. So that possibility of making a gross payment will no longer be there. And the key thing to remember as well is that liability for this can move to you through your supply chain. So that means that if somebody in the supply chain, an agency for instance, isn't applying the tax correctly and the HMRC can't recover it from them, that potentially can come up to you now through the supply chain. So it's really important that you make sure that your supply chain is following this in a compliant way. So they're the key elements around the legislation itself. What I was going to do as well, which I think is useful, is just take you through some of the myths that kind of are out there at the moment. So the first one there is that a company may be liable if it's used reasonable care in making a decision through using the CEST test. So this is false. HMRC has said they'll stand by the outcome of the CEST test, and there's a lot of different opinions about the value of the CEST test, but they've said that they will do that. But the key thing there is it's really important that the inputs you put into the test are correct. But if you do that, then you should be protected. However, if a business does mislead somebody and purposefully goes out and doesn't answer the test in the correct way, liability can come back to them. So that's true. So it's really important that you have a process for making sure you get that right. The third one there, if an agency doesn't apply it correctly, this can't affect clients. Well, that's false. As I said, liability can move up and down the supply chain now. So it's important that you're working with agencies that know what they're doing. And then finally, on this slide, the client must advise the agency about the R35 status. That is true. So it's now a piece of legislation, so it's in the Finance Act. So legally, you have the duty to inform an agency around the R35 decision. So one thing that's often confused is what happens if somebody's found inside R35 and you start deducting taxes, will they get employment rights? Well, that's false. So HMRC have made it very clear that just because a contractor is found to be inside R35 and is paying taxes similar to someone that's employed, they won't get those employment rights, so things like holiday pay or the right to claim unfair dismissal. However, that doesn't mean that you won't see an increase in tribunals where contractors do try to do that. Another big one we see out there is that people are often told that because something's sort of marked as consultancy, that automatically takes things outside of R35, and that also is false. So you do need to look at all your consultancy spend when you're considering this area as well. Third one there is very similar. So quite often we hear that a statement of works will take this role outside R35, and in itself, just calling something a statement of works won't do that. And we'll talk a bit more about later on about what makes it important, what should be in a statement of works to make it R35 compliant. So that is false as well. And just the final one there, that some agencies have got a bit confused about this and believe because they're small, the legislation doesn't apply to them. And that's because the legislation only applies to large or medium-sized organisations. So effectively, that's organisations with more than £10 million turnover and more than 50 employees. And some agencies have therefore thought because they're small, it doesn't apply to them. And that's just not true. It's really down to the size of the client that you're supplying when you're considering that particular rule. So I think that hopefully will give you an overview of the legislation and some of the key sort of myths that are out there as well.
Thank you, Richard. That is very good information. So how do you think that these changes will actually impact us?
Well, the main thing I think we're going to see is an increased polarisation in the market. So you're going to see clients that will either continue to use limited company contractors, and in that case probably put them into more of a statement of works type of arrangement, or you'll see clients, companies who say that they just don't want to deal with limited companies anymore, and we saw that a lot in the banking industry already around, and just saying they'll employ people only on a PAYE basis. So effectively through an agency on PAYE, an umbrella company, or potentially looking at taking people on more permanently as well. So you're going to see that real split in the market, I think.
Brilliant. So Richard, I hear one or two people doubting the government's resolve. So it's probably necessary to get some clarity at this point. Will this actually be going ahead in April 2021? Yeah,
I'm certain it is. And I say that for two reasons. One is that it's now in the Finance Act. So we've actually got the legislation, and previously when it's been delayed, it's really been around the fact we haven't actually got the legislation. So I think that now it's in there, it's going to happen. The second thing is, given what's going on with the economy and COVID, the government's going to be very keen to capture the additional tax. So I think those two things together will mean that it will go ahead. We do have a budget expected in the new year, so you can never be 100% certain, but I'd say I'm 99% there that this is going ahead, and that we do need to prepare on that basis.
Fantastic, thank you. So with that excellent background in mind, we move on to part two, which is understanding the CEST tool. So I wanted to give you an insight into the CEST tool itself, as this is the government's way of making determinations around IR35. So Steve, could you please give us a run through of how the tool actually works and what it's looking to achieve?
Sure, thank you very much, Matt. So as Matt said, the CEST tool is HMRC's online test, which you can use to assess the IR35 status of a role. So the legislation does not actually require you to use it. However, a lot of organisations will use it for at least some of their determination process. Now, I would point out that this is mainly because HMRC will stand by the outcome, as Richard has said, and not necessarily because it's a fantastic tool to use. But with that in mind, it's really useful to understand how it works. So I'm going to bring up a simple process flow here, which shows the key areas of the CEST tool and how they work together to produce a determination. So you can see at the top, the first real area of importance is substitution. Now, this is specifically whether or not the client has the right to reject the worker's substitute. It also looks at whether substitution is occurring or whether it's just a replacement. Secondly, the test looks at direction and control. And this is all about whether the client can tell the contractor what to do, how to do it, and when or where to do it. So James will explore some of the tools like statement of work that you can use to keep a project on track without necessarily controlling the contractor. So the next section, the third section it looks at, is around the financial risk that the contractor is taking on in doing that work. So this includes examining the irrecoverable costs of the work, other sunk costs, and how they are paid for the work. So whether that's on a day rate, hourly rate, fixed price. So it's really important to remember here that being paid a fixed price or on delivery doesn't automatically mean financial risk is taken on. The contractor must incur extra costs to put anything right, not just losing the opportunity for further work. So the final area that the tool looks at is the contractor's integration into the organisation. So this covers things like mutuality of obligation, examining whether or not there is an expectation of further work beyond the current contract. So as you can see from the simplified logic of the tool up here, there are three outcomes. So that's R35 does not apply, R35 applies, and undetermined, which is really helpful. So only one of those first three key areas that I mentioned needs to be satisfied to achieve an outside R35 result. So this is a common misconception with the tool, where you might hear things like, oh, we don't accept substitution, so it must be inside R35. That's not necessarily the case. You don't have to accept substitution, but the contractor might be taking on financial risk, so therefore R35 does not apply. So this looks really simple. However, within each of those areas, there are numerous questions and lots of variations. So unfortunately, it's not as simple as it appears. However, hopefully what this does is give you a kind of a good steer on what the tool is looking to achieve and the elements it's looking at.
Fantastic. Thank you very much, Steve. So While signing up, some of the audience have been asking about some examples of where you might have seen substitution work in practice, and this is something that we've seen come up a lot. So could you help shed some light on that, please?
Absolutely. So before getting into this, I think it's really important to note that substitution is about your right as the client to reject a substitute. So having a process or examples where contractors may have asked to do it or been allowed to do it is not enough. You cannot have the right to reject a substitute. So substitution can be quite a tricky one. And we've seen lots of clients think, oh yes, we do this all the time, it has happened. However, if you actually think about it, it's really difficult to pinpoint exactly when this has occurred, let alone evidence that you do not have that absolute right to not reject a substitute. But from an IR35 perspective, substitution is a really great indicator of whether you're dealing with an individual and possible employee or a business. So there's that classic example of hiring someone to come along and fix the roof on your house, where what they may do is bring in a substitute to undertake different parts of the job. So the tiling, for instance, might be done by a tiler, but you're dealing with that one individual and one business. In a professional services setting, a good example we see is within our technology practice, where they use substitution effectively on a number of projects. So in particular, we were using a limited company contractor for a transformation project with the police force, and this lead architect was able to substitute and use resources from their network. So they brought in a specialist and paid that specialist for a certain piece of work that enabled the outcome to be delivered quicker. So aside from a substitution occurring within, sort of in line with IR35, we were able to benefit there from access to specialist skills from our consultants network. So this is something you might want to be aware of, and actually facilitating a substitution process can have spin-off benefits, such as accessing resource that you might not have been able to previously. So this touches on some of the positive aspects of IR35 and how you can actually improve your engagement of flexible resources, which James will build upon later.
Fantastic. Thank you, Steve. I have another question for you. It's around financial risk. How do you actually quantify some of these terms like significant expense?
So this is one of the major grey areas of the CEST. So thanks for highlighting this one, Matt. It's one where you'll also find that contractors, and I'm really sorry if there's any in the audience, will likely be armed with a good defence and be able to justify why they are taking on significant expense. So what do HMRC actually mean by significant expense? This depends on the value of the contract. However, what they say is it makes up a significant proportion of the contract value, and over 40% is a figure that I've seen used in the guidance. So they specifically say that costs a worker chooses to incur through personal preference are not relevant. So for instance, if they want to buy a nice fancy laptop that costs lots of money, that might be deemed a personal preference rather than required for the job. And everyday items that a worker might have for both business and personal reasons, such as laptops, tablets and mobile phones, are not indicative of significant expense. So we often get asked about driving to work or hotels, other transport or subsistence costs. And this all really boils down to two things. Firstly, are they absolutely required for the role? So if it's required because the worker's based in another country, that is not another part of the country, sorry, that is not typically seen as required for the role. The worker could move closer to the role, or the hirer could actually find someone who's based closer. And secondly, if they are a requirement for the role, do they make up that significant proportion of the contract value that we were just talking about? So the answer you'll probably find to these significant expense questions is likely to be no in a lot of cases, not required for the role. So what are some examples of significant expense? These may be instances where specialist equipment or prerequisites are required and crucially provided by the worker. So a good example of this might be a lorry for a lorry driver if they have to provide that lorry, or specialist equipment for a photographer where a certain camera is needed that photographer has to buy themselves. So organisations that we've seen who do this section well have always defined in practical terms what this means for them, so what significant expense means. They'll have standards and examples in place that define that significant expense. So instead of answering the question, does the contractor incur significant expense, they're answering, has the contractor evidenced direct costs for this engagement over £10,000, for instance? So this adds clarity and consistency to how you answer this section of the CEST.
Thank you, Steve. That was very useful. Finally, I promise this is the last question I have for you for now. How have you seen organisations approach these determinations in terms of who's actually responsible for doing them?
So this is a really key point. So as you probably gathered from what I've said so far, there's lots of different ways you can interpret the CEST. So actually who does it is quite important. So we've seen a variety of approaches with this, from companies who've left it to hiring managers to undertake the determinations, through to companies where a central team or an individual has undertaken all determinations with no input from the hiring managers. So this is often determined by the amount of contractors, the internal resource constraints, and the risk tolerance of that organisation. So I would say, however, there's a few really important things to consider when setting out who and how determinations are made. So how will you ensure consistency is really key. How will you demonstrate reasonable care in line with what Richard said? And how will you ensure working practices reflect the actual CEST determination? So is it a true reflection of what's happening on the ground? And then finally, what's your approach to that undetermined result? So you're going to have a process in place that looks at that and what you want to do with it. So organisations that we have seen this do effectively have achieved the right blend of having a central team control the process to get that consistency, but also getting good buy-in and input from the hiring managers, so things are treated fairly and on an individual basis. Consistency is absolutely key, but also communicating how you've interpreted the legislation and ensuring fairness and honesty across all engagements. So we've sat with a number of contractors who've initially felt hard done by the client's decision, but actually if you go through the rationale behind it and explain why you've come to those decisions, you're likely to gain a far more positive outcome. And finally, my final tip with this is showing a little bit of flexibility and open-mindedness can really help. Listening to other views, so some of the things you might hear on the call today might help you with some of the grey areas, but it also might help you realise this may not be as difficult as it first sounds, and actually you can find a way through the tool and determinations for your business.
Wonderful. Thank you, Steve. At this point, I wanted to share some of the results from the information that you all shared with us when you registered for the event. So what we did is we asked the question, what stage is your organisation at in terms of readiness for the changes? The outcomes were very interesting. It seems that only 6% have already implemented a plan. 7% have drafted a plan but need to pull together external solutions to get this plan moving. And most interestingly of all, we found that leaves 87% without a plan. Bearing in mind the date of April 2021, IR35 will almost definitely rise rapidly in terms of organisation priorities. What I find most interesting in this data set is the 42% of those in the group understand but no plan of action. It would be interesting to delve into this a little bit further to identify whether this is down to internal motivation or stems from a lack of certainty around the understanding already in place. But that's beside the point for now. Let's refocus back to the content at hand. So I'm going to move us on to part 3, which is examining what your options actually are. So following on from this, now's a good time to bring James in to understand the options open to organisations to actually manage these changes. So James, what part of what you do is prep organisations to manage this. So what are the key steps, do you think, to actually tackling this?
Thanks, Matt. Yeah, I think, to be honest, before we get into the steps to manage it, the key thing for organisations to look at is to understand where they are, because approaches to managing it, and I have to be slightly careful calling them solutions. The solution to IR35 is to make sure you do it properly, but the solutions from a business point of view is solving the challenges that are presented by the changes in legislation. In order to look at those, you need to know where you are as an organisation first. So I think there's some key things that you might want to look at to suss out your level of risk, your level of exposure, and probably the right way forward for you. So basic things like the number of contractor engagements you have or in-scope engagements you have in the business right now is going to be fundamental, because there are different approaches for an organisation with a couple as to a couple of thousand, obviously. How are you managing those engagements at the moment? So how are you bringing them into the business? How are they being engaged by the folks in your business? What governance process you have in place around them? And also start looking at things like when these engagements come to an end, how critical are they from a business point of view? Are they likely to run on past the stated end of the engagement, so past April next year? Because all those sorts of things give you different options and therefore different approaches. Because I think fundamentally one of the things I would say is there's not one gold-plated standard that every organisation should look to do. There are different approaches to suit where any particular organisation might be. I think once you've got to that point, you can then start to look at some different options. And there's some pretty basic ones. I mean, there's the obvious one, organisations that are just taking a blanket approach. Be careful, not a blanket approach to determination, but a blanket approach in terms of engagement. So saying we don't engage PSCs anymore, which there's the key thing to consider there is thinking about what you're going to do with the ones you have. So that doesn't solve that challenge, but there is something to say actually that now is as good a time as any to look at that approach, because partly because of the IR35 application changes, making contracting possibly less attractive, but also some of the things we've been through, in this global pandemic. I think some of the support that contractors feel they've had from the government's not quite where they wanted to be. So are you at a place where actually you're pushing an open door, and a lot of folks are considering not contracting anymore, so looking to stop and move away from PSCs in the same way it might be a time to do that. I think some organisations are looking at what they do with their perm headcount. Do you look to increase your permanent headcount, which from an IR35 mitigation point of view works well. I think it's the big consideration is, if I'm honest, some of the salary conversions that you look at with that contract force coming on board, and whether you want to engage that population or that skill set permanently does remove some of your flexibility, particularly in a project-based environment. I think there are some conversations and pushes around outsourcing and outsourcing processes, and I think there's a lot of detail that sits behind that and a lot of consideration. I think you need to be mindful in that space that you're not using a sledgehammer to crack a nut type situation, where to outsource huge chunks of your business and operation just in order to manage IR35 is quite a big step, and there's quite a lot of considerations around that. So it can be effective and it can work, and we've seen it work very well, but it just needs quite a lot of thought around it. And I think there are lots of pros and cons to these different solutions, and they will be very much dependent on where any organisation is, and like I say, that the makeup of that contractor population, the makeup of the way they deliver things at the moment. I think there's something to be said at the moment in there is an opportunity here on both sides. As I said, the PSC market is changing a lot. Drastically in terms of the demand and the makeup of that market, and it will continue to change over the next 6 to 12 months certainly. But there's also some opportunity here from organisations' point of view, where actually you can use some of these changes. Some of the most successful clients we have used this opportunity to say, well, the outsourced contracting, consultancy, professional services space, whatever you want to call some of that spend, has often been a poorly mandated area of spend from an organisational point of view, and does this give us an opportunity to get some more control and almost that catalyst for change in that space, whereby we can start to have better visibility of that population and control over that population, because we now need to. It's so much more important to us to have that control. But from a wider organisational positive on that, I think there's the opportunity, and we're seeing the opportunity be realised by some organisations thinking, well, can this help to move our model forward? We've talked about more flexible, more remote working. We're driven to do that given the current situation. Is there an opportunity to move to a more outcome-based way of working as well? So actually ingrain some of that culture in your business, so that not just with some of the external skills you might engage, but actually the internal and permanent skills you might engage, just moving that whole culture towards more outcome based. Because generally, when we speak to organizations about their contractor population, they don't have huge qualms in knowing they need to pay market rate to get the right experience in. What they do have issue with is when they don't quite get what they pay for in that space, and so moving to more outcome based, milestone based type models and culture can be quite useful. So I think there's a whole heap of different options in there, and different models and services and solutions that organizations can employ. But I think that go back to that key point, Matt. I think the first step is to understand where you are, because what's right for one organization will absolutely not be right for another. It's about where you are, and therefore what's your best way forward and what's your best way to manage this.
Okay, great. Thank you, James. I do have a few more questions for you, but at this point, I'd just like to remind everyone that there is a dedicated inbox at the email address consultancy.plus@reed.com. So if you have any questions, please send anything through you'd like us to answer. Again, that's consultancy.plus@reed.com. So, James, moving back to you. That was great information. Could you share some examples of this or the types of models that people are actually using to do this, please?
Yeah, I mean, there are a lot. I probably can't share all of them, all of the details, because there's a lot of different approaches to this, and there's a lot of variations on themes as well within that. One thing I would say, I think, when looking at your approach to managing this, one piece of advice we generally give around organizations looking to manage it is to not look to close yourself off to different ways of managing external off payroll resource, because it's a brave person that starts to predict where these markets will be, where different industries will be in the next 6, 12, certainly 24 months. So to put yourself in a place where you say, right, we only do this now, does have an inherent risk in it, in that if that market or the industry shifts away from that, not only are you going to have to change that decision in order to possibly get what you need into the organization, but you may be behind in terms of your understanding of how some of those different models work, how to engage them correctly, how to manage them correctly. So I would say that flexibility and choice is important when looking at your different ways to manage or implement solutions to help you manage the risk around this. In terms of the different models available, I think there's a handful of different options, and like I said, there's probably some variation on theme in this as well. So the one talked about a lot is statement of work, SOW type models. Now, these can be very effective for lots of reasons, not just in terms of IR35 mitigation or management, but there are a lot of pitfalls in it, and you need to be careful of understanding what you need and what's going to work and what's going to be effective. It's absolutely not a silver bullet. You need to be very wary of kind of pseudo consultancy in this space and what level of risk is being shared and what that contract structure says. But fundamentally, I think the principle around this is, a statement of work document is purely a contract structure. The detail within that contract structure and what happens in practice is fundamentally what's important. A makeup of a statement of work document would broadly be, what do we want to happen, when do we want it to happen, who's going to do it, and how do we pay for it. And if the detail within that says, we want someone to come in that we want to tell what to do, and they need to be on site between 9 and 5, you're probably, whether that's in a statement of work document or not, you're probably looking at an inside determination on that. So it's very much the detail of what's in there that counts. And likewise, having a statement of work in place that says all sorts of fanciful things about the working practices and how this is being delivered, which doesn't marry up with the reality of how that's being delivered, is, again, just doesn't really help you in any way, shape or form. In fact, it probably just adds confusion, and you risk some avoidance claims. But where a statement of work can work really well is if you are looking at different ways of working, or actually just to cement the ways that you work now, looking at some of those output-based approaches and commercials and sharing risk and really having some good control over the types of expertise that you bring into your business. And I don't mean control in terms of direction and control, but control in terms of ensuring that you get what you pay for. Statement of work models do work pretty well, and they can really be effective. I think when we talk to organizations about this, the stage at which we generally suggest that it's thought of being introduced is really, you think about what you want, you undertake the determination, and then the statement of work comes after that. That documents what you want to happen and how that's going to work. So that helps to clarify in people's mind that it doesn't change the determination, it purely just documents what you're going to do. So statement of work, yeah, it can be a very effective model, but be cautious of it and be cautious of where and how you use it, because it absolutely is not a silver bullet. I think there are probably a couple of variations on themes around things like outsourcing and offshoring. Again, outsourcing particularly can be a very, very effective way to manage the risk around IR35. I think you are outsourcing an entire service, so you're moving that risk onto whoever you're outsourcing that to. The details clearly in the contract and the arrangement, you need to make sure that you are outsourcing that, and it's not, as I said on that statement of work document, it's not a document that says one thing and a different thing happen in practice. But they can work very well, and actually there are lots of good reasons to outsource services, and organisations get a lot more value from it beyond just consideration of IR35. But I think, again, the point I made earlier on this is the key one. If you're only doing it in order to manage IR35 risk, I'd suggest you're going a bit over the top, because there's a lot to consider around outsourcing. Is your business in a place to outsource? Do you want to outsource it? Are you happy to outsource the control of that? Actually, what's going to happen to your service levels if you outsource that? What's going to happen to the permanent resource you've got in your business that are working as part of that current solution? So it needs a lot of thought beyond a knee-jerk reaction to a piece of change in legislative application. So, and probably a variation of that would be, as I said, offshoring as well. Offshoring can have some really strong commercial benefits, and I'd absolutely recommend that organisations look at it if an appropriate space to do that. But again, to look at it purely through the lens of IR35 is probably not the right way to go. Does it stack up from a business point of view for lots of reasons around how you deliver your pieces of work or how you want to engage external skills, before you just start to think, okay, does this help us from an IR35 perspective? Another one that's common and we've come across a lot, and we deliver with organisations and they look to implement is an employed consultant model. Again, it can be very effective in terms of managing the risk around IR35, because you are engaging someone who you should be, providing the model is structured correctly, should be engaged under a PAYE or similar kind of model, so that the determination, you're away from IR35 determination at all. Again, though, a lot of the devil is in the detail of the value you're going to get from this from an organisational point of view. Where it tends to work well, or where we tend to see it working well, is in that kind of middle to lower end here. So if you think of a tech department, for example, BAs, PMs, testers, developers, those sorts of roles tend to work well, because I think in the main, and you never tell without the detail, but in the main, those types of roles are probably likely to be found as inside IR35 broadly. So from a market point of view, that population will probably accept the need to move to a permanent style PAYE engagement, and actually retaining some of the elements of flexibility as an employee consultant might be quite attractive to them. Where you don't get so much success around employee consultants tends to be the bottom end of that market, where you're probably better off really looking at the BPO and volume there, because that's the only way really a supplier is going to get any kind of economy of scale of setting up such a permanent model, where they're taking all the risk and liability around engaging that permanent workforce on your behalf. And the top end is challenging as well. I mean, for a few reasons. I mean, getting engagement from some of those senior niche resources who will often want to work on an outside basis, and their skill set might be geared to allow them to do that in terms of the knowledge they bring into the organisation. But the big one is probably the salary piece. It's one thing to convert someone who's on a couple £100 a day into your salary structure. It's a completely another thing to convert someone who's on £1,500 a day into your salary structure, and take from an external supplier's point of view the risk around doing that and then providing that into an organisation. So again, value in employee consultants in the right place depending on where you are from an organisational point of view. And I think the last couple of probable models we see commonly are where organisations look to manage some of the risks through supplier management models, so managed service solutions or developments on the managed service solution, which again can have real value for lots of reasons outside of IR35. So looking at the additional control you get, MI, compliance, payroll management, you probably, through an external managed service provider, you probably will get some options as well from your contractor base. So they may run a POA payroll, they'll probably run a PSL of suppliers in and around umbrella companies. They may run a deemed payroll as well. So you'll get different options which you can offer to your contractor base, which is useful in terms of trying to engage them and retain them. You will also, from an IR35 perspective, you can move some of the risk this way as well by introducing a managed service provider, because whilst the determination will still sit with you from an organisational point of view, an end user point of view, once that determination has been made, then the liability for making the necessary deductions if something's inside will go down the chain to the end provider of that resource. But if they don't fulfil that obligation, it will likely flow back up to the managed service provider rather than all the way back up to you as an organisation. Now there are some nuances around that, but broadly it does manage that risk quite well. Yeah, so the other thing we commonly see, and a benefit to organisations where you look to introduce that kind of managed service model, is having a mandated process around making determinations. So to Steve's point earlier on, having a clear, robust process. How do we make status determinations as an organisation? How do we track the outcome of that? How do we make sure it's shared effectively with that supply chain and those resources as well? So that can work well. And there's traditionally those models sat really in and around sort of traditional contingent labour, but there is more commonly being organisations that are expanding those types of services and solutions out to cover services provided, external services providers. So commonly what we'll see there is an element of a triage process that sits on top of that solution, which either the organisation or the organisation in partner with the supplier or the supplier will help that business make decisions around what type of engagement they need. Is it PAYE, traditional temp stuff? Are they best off looking at outsourcing a chunk of work or work packages? Are they best off looking down a consultant route and an SOW route? And they can then make sure that all the processes beyond that are followed. And one of the big benefits we see there is that provider will likely give some assurance around managing the reality of the determination. So if the determination is made in a certain way, say it's outside of IR35 and that's based on these key criteria, that's why it's been deemed outside, then they'll keep a watch and an eye and a reporting piece around have any of those things changed in practice and principle, or actually are we still staying on the right side of making sure that the reality of that determination you've made matches up with the determination. So they're probably the main ones. Like I say, there's variations on themes within that, so a lot of organisations do a mixed bag of those depending on different parts of the business and where they are, and it very much comes down to what's right for an organisation. I say an organisation with a handful of PSCs or off payroll engagements, very different situation to an organisation with a couple of thousand. So very much a case of understanding where you are, what you need, and then working through what the best approach is for you. And one of the things to consider there is probably don't try and do too much at once. You may have a roadmap of where you want to get to and a reality of where you need to be now and in April 2021.
Fantastic, thank you, James. A lot to digest there. Hopefully that was useful for everyone. That takes us on to the final part 4, which will be a wrap up and the questions section. So those are the core topics and questions covered. We now wanted to move on to an open Q&A. Before we do, and to give everyone a chance to think up some questions for the panel, and again, just a quick reminder that please use the email address as the chat function is not working, consultancy.plus@reed.com. Just a quick reminder for everyone that does attend, you will get access to the information library and a full range of content on the dedicated website for all things IR35. This will have a growing amount of video content, examples of organisations' different approaches, some detail on different solutions, ideas on project plans, and news on the changes as well. So hopefully this will help get you through the changes, and you can also book a consultation with Consultancy Plus if you needed further support. There's an easily found button on the page to do this if you do need to do that. So back to the Q&A. We have had a few questions come through. So the first one is, I'm going to direct this one to you, Richard, if that's all right. Have HMRC taken action against anyone under this yet? And if so, what happened and what did they do?
Okay, Matt, thanks for that. To my knowledge, there's been nothing that's gone through in a tax tribunal to this point. There was a case around NHS Digital where there were questions around how the CEST tests have been completed, and there's an element of money that was apparently had to be paid back to HMRC around that. But I think it's very unlikely in the public sector, which is basically where it is at the moment, that we would see anything going to tax tribunal, and I guess they would be settled outside of that arrangement. So I think in basically the answer is no, there isn't anything at the moment.
Sorry, just taking myself off mute there. Thank you, Richard. The next question I'm going to direct to James. James, is working under an umbrella company, you almost alluded to this earlier, is working under an umbrella company a viable solution to continue working with contractors without the employer carrying the risks?
I mean, In principle, yes, probably. It's a slightly woolly answer. I mean, umbrella organisations do work in different ways. They have different models, have different contract structures. But in principle, should be a PAYE model. So you effectively IR35 doesn't apply because you won't be engaging with a PSC. But I would caveat that with a warning to say, make sure that you do your due diligence around the umbrella companies that you engage, understand how they are looking to pay the resources that they use or engage with you. I think when we do our checks here, we do get copies of pay slips and understand how that process works, because there are different ways of doing it. I mean, those things shouldn't fundamentally impact your IR35 position, providing they are making those determinations correctly. But I would be optimistically cautious, I would say, if you're doing that you are helping to manage a lot of that risk, because like I say, they are fundamentally PAYE solutions, so IR35 shouldn't apply. But as with many things, the devil's in the detail on it.
Okay, great, thank you. Steve, back onto the topic of substitution. Do I need to vet a substitute?
This is a bit of a tricky one. So in theory, no. You're engaging with a business, a PSC, albeit to undertake the piece of work, and if they bring in other workers to do elements substitute for some of the work, in theory they would be responsible for doing the vetting and compliance, whether that's ETW checks and things like that on the business. However, this is really what your tolerance to kind of risk is. So what we've seen a lot of organisations do is still want to do due diligence on a substitute, and that's because they want to secure their supply chain and make sure that the right vetting and the right compliance is done through their supply chain. So the answer to that is, in theory, no, but you probably would want to, just to ensure that those checks have been done. Okay,
great. Richard, next one's for you. Does it apply to all companies, regardless of size?
So I think the answer to that is no. The legislation only applies to medium and large organisations. As I said before, the kind of ruling around what qualifies as being not small is somebody who has more than £10 million turnover, around £5 million in assets on their balance sheet, and more than 50 employees. So if you fall into that category and you're employing PSCs, then you do need to look at doing the IR35 assessments. If you're small, then nothing changes. Effectively, you continue to employ contractors, and the contractor, perhaps in line with their accountant, would make that determination about whether they're inside IR35 or not. So, it doesn't apply to all businesses, and if you're small, nothing effectively changes.
Okay, thank you. Steve, back to you for the next one. How does this impact a client based outside of the UK?
You're giving me the tricky ones here, Matt.
I know, sorry about that.
So this one's really tricky. It's the probably what our standard answer to this question would be to go and seek further advice from a legal perspective. If there's an element of overseas involved in the chain, there's kind of lots of different aspects, and HMRC have released some guidance on this, but it all depends whether the end client is overseas, the agency, if there's an agency in the middle, the fee payers overseas, or the PSC themselves are overseas. A general rule of thumb is if the PSC is a UK-based PSC and it's a UK-based resident, then the rules would apply. You'd need to do the CEST determination and then deal with it accordingly. One of the other things I would say around this is, if ever in doubt, just follow the CEST determination or whatever IR35 determination you're looking to do, and treat it as if it was kind of a standard relationship. But yeah, pretty complicated. If you fancy a Google, then there's quite a lot of information on there about IR35 and overseas elements.
Okay, thank you, Steve. Apologies for the tough question. But on that note, actually, this is a question for James, if that's all right. It's been mentioned that HMRC would stand by the CEST tool determination. Is this actually the case? And how does this work?
Yeah, they will stand by the determination. I think I was looking at that question a second ago. I saw it come through from Laura. They mentioned the piece that Richard spoke about NHS Digital. They will stand by the determination, or they say they will stand by the determination. But that is based on the assumption they agree with the inputs, and from what I read around that particular piece with NHS Digital, the issue they had was with the inputs that had gone into it. And actually, they weren't accurate, and they didn't reflect the reality of what was happening. So clearly, HMRC aren't gonna make a statement that says we'll stand by the output of the determination regardless of what you put in there. If what you put in there isn't accurate, therefore the outcome's not going to be accurate. So they have stated they will stand by the output, but you do need to make sure those inputs are correct. And I think from what Steve was saying earlier when he ran through some of the details of the CEST tool itself, that isn't always as easy as it looks. There are misinterpretations. There is a risk, depending on who's done it, as to how they've interpreted a particular question, and there are some pivot points as you go through that testing process that flip the determination quite quickly, and not understanding those can really change the outcome you get. So yes, they have said they will stand by the outcome, but that is heavily caveated with making sure they agree with the inputs. So it's, if you're confident in the inputs, then you can stand by that assurance from HMRC. But it's only as good as what you put into it, I'm afraid.
That makes sense. Okay, thank you. Richard, a question for you. This is from a member of the audience. We have IT contractors that were due to move to an umbrella company before lockdown, before IR35 was confirmed as to be stopped for now. Does this mean that if they stay with us, being paid through an agency and umbrella company for many months and years, they are not entitled to employment rights?
So the fundamental difference between a PSC arrangement and an umbrella arrangement is that the PSC is somebody operating through their own limited company. So the limited company is responsible for obviously employing themselves and everything that goes with that, and paying the right amount of tax. An umbrella company isn't a limited company; it's a PAYE arrangement. So if you're engaging someone through an umbrella company, they are already operating through PAYE and will have employment rights. So there's probably a bit of confusion around what an umbrella company actually does there. So it is a PAYE arrangement. So all the tax is accounted for. And they will get employment rights. So the umbrella employs them and will make sure that they get the right amount of holiday pay, and would be responsible for anything that happened, via a tribunal, for instance. So hopefully that qualifies, sort of clarifies the question. That I think it might be a bit of confusion around what an umbrella actually is.
I think just to jump in there as well, Richard, to add to that, I think the piece around it's if the PSC is determined inside R35 and then you continue to engage with that PSC, so deducting tax and NI before paying them, that's when the employment rights won't be for kind of auto acquired for you to give to them. They'll be getting them from the PSC, if that makes sense.
Yeah. So in all cases, whether the PSC is operating on an inside or an outside basis, they remain an employee of their own limited company. So nobody would be liable for that person's employment, as it were, other than themselves. That was it, Matt.
Brilliant. Hopefully that provides some clarity for the person who asked that question. We have another one for James. We are a charity and training provider. We engage 20 freelance trainers on training delivery activity, where they have the right to sub with the same standard of trainer, but we set the date and time and location. Would this work under a statement of work model going forward?
Thanks, Matt. I was really hoping that was going to go to Steve, the tricky question answering, Matt, if I'm honest with you when I saw that. If I'm honest, it was Stephen, wasn't it? I think I'm sorry, but it really comes down to detail. To put in place an SOW model, as I said earlier on, doesn't fundamentally change the situation. So it may work as an SOW model going forward in terms of what you get out of it and how you manage those resources and how you share risk. But whether it works from any sort of differential in terms of IR35, if you're not changing fundamentally the way you work, then no, it won't, or very unlikely to anyway. Now, one thing I would say is it's worth considering the term freelancer, I think, in that question, because depending on how those freelancers are engaged, often when we see the term freelancer, used. It refers to someone who's actually a sole trader as opposed to having their own limited company, and that does change things a little bit, because this piece of legislation is not focused on sole traders. And actually, some of that tax liability will already sit with you from an engagement point of view. So actually, April 21 doesn't necessarily change your position on that. So it's worth looking at that and whether you're already carrying some of that liability. But with regards to the SOW solution, it may be that an SOW model works very well for you for lots of reasons. Whether it helps you in any way with IR35, I'd be wary of if you're not changing anything. But I'm happy to take that away and talk through that with you and see where you are and see what you need to do, and actually you can get some operational benefits from that and possibly change your IR35 position if you're changing some things operationally. Then that might work.
I've got just a little bit to add to that, if that's all right, Matt. So I think the question also sort of made reference to you. I think you said that they have the right to substitute, but other elements you're telling them what to do and when and how. So that takes us back to kind of that CEST logic, where theoretically only one area needs to be satisfied for you to kind of say IR35 doesn't apply or the test to give that result. So in theory, that's true, but one kind of word of caution around that is if substitution is that part of the tool that you're kind of hanging your hat on, and that's the thing that's determined it outside R35, and everything else might point to an employment relationship. One of the things we always see is you need to be really clear that that substitution is accurate and that you do not have the right to reject that substitute, because obviously, as I said, all the other things might point to R35 applying. So it's really worth bearing that in mind.
And that, for what it's worth, that is where an SOW contract structure can help, because it does document that relationship and how that's working and what you're getting from it. So it can help provide clarity between you and the resources you're using as to how that works.
Completely. Hopefully that was helpful. We have time for one more question, I'd say, and then I'm going to close the call, and we'll try and stick to 12 o'clock as the end time. This is a quick one for you, Steve. I don't think it's as difficult as the other ones, hopefully. Having carried out an IR35 CEST determination, should you repeat it, and how regularly?
Thanks, Matt. I think this one is relatively straightforward. I think you should absolutely repeat it if the scope of the work changes. So if there's a material change to what that resource or person's doing, then it needs to be repeated. As a general rule of thumb, in terms of time-wise, anywhere between sort of 3 to 6 months is a good sort of repetition period to put in. So if that's a longer-term contract, you might want to repeat it just to check if things have changed. You absolutely want to avoid the situation where you have resources in your business that have been there 18 months and are doing something completely different to when they first came in, and therefore the CEST might not stand in terms of how it's working. So in summary, every 3 to 6 months, or when there's been a material change to what they're doing.
I think the other thing to add to that probably is to do it at any contract extension as well. So if a contract's to be extended, it's probably worth rerunning the test as well.
Yeah, definitely. Okay. I feel like we've managed to get through a decent amount of questions there. Apologies if we haven't managed to get to your question. This brings us to the end of our time slot and the end of the session today. Thanks so much for joining. On behalf of the panel, we do hope you found this content useful and that you continue to receive value from the content on the website I've been shamelessly plugging throughout. We really are excited about it, and we think it will deliver genuine value for many of you listening today. So like I said, please keep an eye out for the follow-ups and check out the website as part of this follow-up for plenty of further detail. Stay safe and have a wonderful afternoon.
Thank you, Matt.
Thanks all.
Cheers, Matt. Thank you.